Canada exported 10 times more gold to China than stated. China has quietly placed Canadian gold at the top of its import ledger, with official customs data valuing bullion inflows at more than 10 times the level reported by Canadian authorities. According to the Globe and Mail report, quote, gold, not canola or coal, is China's number one import from Canada, at least according to China. Figures from China Customs show 25 billion of Canadian unwrought gold imports in 2024, compared with the 1.9 billion reported by Statistics Canada.
According to Canadian Customs data, coal, canola, and petroleum rank as the country's top exports to China. But Chinese records tell a different story. Based on China's data, gold is the top Canadian import. This discrepancy highlights the challenges in accurately tracking China's gold reserves. Based on Chinese data, the value of imported Canadian gold was 10 times higher than reported by Canadian export reports. By importing Canadian and other foreign gold, China diversifies its supply and enhances its monetary security. Many analysts believe this reflects Beijing's long-term strategy of positioning gold as the once and future money, reducing reliance on the US dollar and reinforcing its role in a potential new gold-linked monetary system. Vince Lanci, a renowned expert in precious metals, highlights that the difference is rooted in the way the two countries report their imports and exports. According to a report by the Globe and Mail, Canada does not track exports once they leave the country's shores and cannot account for a product changing hands along the way. On the other hand, Chinese customs require importers to report the origin of all products. Canadian statistics show $1.9 billion in direct gold exports to China. However, according to Chinese customs reports, the country imported $25 billion worth of Canadian gold. The Globe and Mail article notes, gold investors appear to be unloading their supplies of Canadian bullion in response to China's continuing buying spree. Meanwhile, in July, Swiss gold exports to the U.S. surged to 51 tons, the highest since March, and a massive jump from just 0.3 tons in June. Gold bullion exports have accounted for over two-thirds of Switzerland's trade surplus with the U.S., even though refineries capture only a fraction of the value. These cases highlight how gold, and to some extent silver, are treated ambiguously. They function like money but are classified as commodities on paper. This duality provides nations with a covert mechanism to balance trade deficits, often flying under the radar of traditional trade statistics. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
Concentrated silver in Latin America, unwrought gold, gold is money, and gold is a commodity. And that's how they avoid the money thing. All right, the gap stems from differences in reporting. Canada tracks sales to first buyers, often in London or New York, while China tracks the true origin of the gold, regardless of trading hubs along the way. Begs the question, how does US and London treat gold exports that come from Canada going there? Do we mark it as exported, or do we say it's a pass-through? Or is there just like a black hole where the gold just appears in China and nobody claims to have it? I'm telling you, man, this is some shady shit. More in the Premium Post, Canada exported 10 times more gold to China than stated. That was mailed this morning. I can't even get into it. U.S. imports of Swiss gold surged 51 tons in July. The other gold story. Swiss gold exports to the U.S. reached their highest levels since March. Bloomberg reported that, with July shipments climbing to nearly 51 tons compared to less than 0.3 tons in June. The previous high occurred in January. This graphic is not perfect, but it gives you an idea of what they're looking at here. When exports surged to 193 tons. Swiss gold exports to the U.S. jumped to nearly 51 tons in July, the highest since March. Trade surplus and tariff pressures are part of the problem. Now, this story, as framed by Bloomberg, is not about the fact that we're importing gold again, although it is. They're focusing on, probably correctly, that $36 billion was the gold import, and that accounted for more than two-thirds of Switzerland's trade surplus with the U.S. So, number one, their refining is the only thing that's really giving them a trade surplus with us. Number two, and this is important if you're an accountant, they're counting all the bullion as an export of a value good. So they're exporting $36 billion in gold, but they're not really exporting $36 billion in value added to the gold. You follow? The gold is what it is. Let's say they've added, $100,000 in value by refining it. It's a pass through. By the way, this goes to something Martin Armstrong said years ago, and I've been paying attention to for a while. Gold and silver are intentionally left as a loophole commodity to balance trade deficits. Oh, I'm Japan. This month we sold too many cars to the U.S. I'm sorry, we bought too many cars from the U.S. We need to offset our balance, so let's sell them some gold. More commonly, it's like this. We're a country that sells too many things to the U.S. Let's offset our trade deficit by buying some silver, by buying some gold. And then they take the silver and gold in, and then they wash it through the LBMA and they send it somewhere else. But that's how they surreptitiously balance the trade deficit. They've been doing it for decades. It's all bullshit. And they know it's bullshit because they will not call gold money, yet they treat it like it. Yet simultaneously, they also treat it like it's a commodity or a finished good. That's how they do it. It's a dual purpose product.
That leads to an important question. Exactly how much gold does China have? The answer is we don't know. As the discrepancy between Canadian and Chinese data reveals, it's challenging to gain a clear understanding of it. But it's almost certainly more than the Chinese reveal. The People's Bank of China reported a 6-ton increase in its official gold reserves in the second quarter of 2025, bringing its official holdings to 2,296 tons. That accounts for approximately 6.5% of its total reserves. But as analyst Jan Nieuwenhuis has reported, the People's Bank of China is secretly buying large amounts of gold off the books. According to data parsed by the renowned money metals researcher, the Chinese central bank is currently sitting on more than 5,000 tons of monetary gold located in Beijing, more than twice what has been publicly admitted. Nieuwenhuis estimates that the Chinese central bank covertly purchased 570 tons of gold last year, contributing to a 4% increase in gold's share of global international reserves, the most significant gain in 4 decades. Mining Association of Canada President and CEO Pierre Gratton said his country should follow China's example. Let's recall the interview.
UBS raises gold targets for fresh reasons. America's 2 paths towards anti-Goldilocks. Goldman's Gold Primer Part 2. And we'll give you the full development of the world leaders planned the immigration surge and more. I don't know how much more, but there can be more. I promise you we're taking off next week. That's why we're throwing a lot of content to you now. Let's move to what's next. Data on deck, Jackson Hole. Powell speaks at 10 a.m. today. Okay? That's what you need to know. Let's talk about Jackson Hole, and then we'll go to the charts. Yesterday, we said markets are expecting a very dovish Powell based on STIR, short-term interest rate futures, and the anticipation of further revisions downward in employment, which is something Zero Hedge alerted us to. They did it last year in September. They'll do it again this year. Several banks are less sanguine on Powell being dovish, however, now thinking Powell will likely punt his bias on rate cuts until the last minute, given he has 2 more data points, payrolls and CPI again, to squeeze in before he announces September. We will see. We don't know. So that's your bottom line. He doesn't. Some people have asked the question, and it's not a stupid question. Don't make fun of them. We're all friends in the community chat. No, he's not going to. He can't. We could, but he can't. He's not going to cut today. He's going to give a speech. The August is not a cut month, or August is not a decision month. September is. I could be wrong. I don't think I am, but I could be wrong. Nobody's perfect. All right, let's go to the charts and let's get this boy over with. I want to focus on Bollinger Bands today. First of all, the moving averages. Get rid of all my pretty drawings here. The moving averages are, that's a weekly. The moving averages are where the market is right now, right? So now you're going to have to see if they've retested moving average again. But I do want to talk about Bollinger Bands though. Okay. On my system and other systems, gold on a weekly basis has pretty much inhaled. So Bollinger Bands are a measure of volatility in combination with implied volatility and historical mean reverting volatility. We can predict uh, when a market will move, which direction we don't know, but prices tell us that. So as it stands right now, if the week settles, it's not going to happen this week. It could, you never know. If the week settles over 34.04, you should expect continuity of movement. If the week settles below 32.20, 32.44, you should expect continuity of movement lower. And it looks like it's very nice and orderly. That's a market that's in play. Exhale, inhale, exhale, inhale. It's lovely. Doesn't mean it's going to happen again, but that's why your trend lines and moving averages form. When you see trend lines and moving averages and you see this oscillation of the Bollinger Bands in a direction, that's usually a sign that really big money is methodically getting involved or has been involved. And it's also a sign of a market that's under control.
China's gold strategy reveals far more than trade discrepancies. It underscores Beijing's determination to secure monetary independence and reduce reliance on the US dollar. With official reserves underreported and covert stockpiling underway, China is positioning gold as the backbone of a future financial order. For resource-rich countries like Canada, this raises the question of whether they, too, should view gold not merely as a commodity, but as strategic money. If China truly holds over 5,000 tons of gold, how might that reshape the global monetary system in the coming years? Should Canada and other Western nations begin stockpiling gold as a safeguard against future currency shifts? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.